The bullish sentiment is really strong right now, but that means there's all the more reason to just be aware of what might go wrong. And one of the last things that I think is really standing between Bitcoin and doing something quite fantastic is one of the longer term kind of resistance lines that we have. And you would have seen something about this yesterday where I actually covered a resistance line for you that looks something a little bit like this, right? And basically showing you how we're basically just kind of at a similar area right now. And, you can draw this a couple different ways and it would still kind of tell the same story. But the overall point is that we still have a couple things that are holding Bitcoin back. And overall, I'm not actually too worried about them. I definitely think, and I've been saying this for a long time, that I think 20K, 30K, or even, and you'll remember this now, even back here, I was saying I think 40K is on the cards. Obviously, that's starting to become a lot more believable now. There are still some things that I want to draw your attention to. And this is actually to do with this trend line that we had right here on the weekly time frame going back all the way to 2018. This is when Bitcoin topped out at 20K and then went flat at 6K. We had this trend line that we interacted with 3 times. And the numbers are really similar. This is definitely something that's worth pointing out, because we first got a rejection right here, came back down a couple weeks later, got another rejection, and then waited a long time, formed a 50% rally to the upside, and then bam, got a third rejection there. And it's actually really similar to what we're looking at right now. Over here, we got a rejection some weeks later. To be fair, this was like 4 months later or something, but definitely, not too long afterwards, got a second test. And then a very long time later, we had our 45%, 50% or so, whatever, pump to the upside where we're interacting with the same resistance line again. And I think that's interesting. I think that's important. This is the kind of thing that people are not going to want to pay attention to, but this is a similar kind of situation playing out for Bitcoin again, and the numbers get kind of crazier than that. Now, I'm not going to pull this up in front of you because it's going to take me a long time to find, but if we look at the fear and greed index, let's actually update this and see what we're looking at today. 60 again, right? So greedy territory here. What we had previously was the fear and greed index on this chart back in 2018 managed to rise from 10 to 63. We had a reading of 10, and then we pumped up to 63. And on this occasion, we've gone from 20 right here down in the lows here, and now we're up to 60. We're at 60 today, and we were at 60 a few days ago as well. So pretty clear here, ladies and gents, that a lot of the numbers are quite similar. Not only is this the third test, not only is this basically the same resistance line, not only is it also nearly the same pump to the upside and a very similar interaction with 2 quick hits and then a much more spaced out hit. Yeah, there's a lot. There is a lot on this chart. Not only are all of these factors at play, but I think above all, it's the sentiment. The sentiment is showing us the same thing as well, which is like the single biggest factor that I think is contributing towards potentially making this a very clear setup for, a rejection, which obviously isn't fun to talk about. And the thing is that when we had this play out, if we actually look at both charts side by side, we managed to pull a 40% drop to the downside. And it's really interesting because we had a very similar wedge situation on the chart back then. Again, same resistance line, but a support line drawn a little bit like this. We managed to fall down by 40% from that high. And that took us all the way down to, the $6,000 area. And what's really interesting is that if we form a similar type of rejection right now, it also puts us down at the same support level that we can draw in a similar way. Now, at what point is this too many coincidences? That's the question I want to ask you, because the thing about this analysis, and you already know the deal, you're getting this with this YouTube channel. A lot of other channels out there are just going to talk absolute shit and then just act like it's coming straight from God, like it's coming straight from heaven. It's different here. I am going to point out to you when analysis is weak, and I wouldn't necessarily call this weak analysis, but it's definitely not super strong either. I mean, we're just looking at a fractal at the end of the day, and circumstances are quite different to what we saw back in 2018 on this chart right here compared to what we have right now. And I'll talk to you about why in just a minute, but circumstances are quite different right now. But we are in a situation here where Bitcoin, and we've known this for a very long time, this is one of the recurring themes you'll see if you're subscribed to this YouTube channel, Bitcoin loves to repeat certain characteristics with its chart. I don't make the rules. This is just something that we've seen Bitcoin constantly do. A great example of that on this chart right here is that Bitcoin will, for example, fall down to a low, set a low, rally up, and the very next time we hit that low, it'll penetrate below it. Again, fall down to a low, set that low, rally up, very next time we fall down, penetrate through it. even similar on this occasion, we set the low right here, rally up, stayed up a little bit, but the next time we went down, we collapsed below it. It's actually really predictable within these downtrends. Look, again over here, set the low, next time we come down, we collapse below it. We're not getting second, third, fourth support hits within our downtrend, right? The second that we come down to the previous low is usually the point that the market collapses much more. It's just the way it is, guys. It was different back here, but we have very similar characteristics repeating on all sorts of different time frames. And again, you would have heard a lot about that on this YouTube channel. And these aren't things to be scared of. This is actually a blessing. I wouldn't even say it's in disguise because it's very fucking obvious. This is actually a blessing in my opinion because it makes it quite easy for us to trade. When we've got easy trading opportunities, when we've got predictable characteristics with Bitcoin, we've got great opportunities to get into the market. And all of that is even better with OKX right here, giving you up to 30k in rewards. I want to very quickly shamelessly plug this because this is a huge offer, and you guys know that I've been talking about Bybit for quite a while, but and Bybit has got a 30k offer up for grabs as well. But the cool thing about OKX and what actually sets them apart from Bybit is that with Bybit, to earn their 30k offer up in the rewards tab right here, you would have to deposit you'd have to deposit $250,000 and trade. With OKX, it's a lot easier to get that bonus. With OKX, you get 10k for signing up, a mystery box that can go up to 10k for signing up, and another mystery box that can be worth up to 10k when you deposit $50. It is a lot easier to get your bonus right here, and that's free money. That's rebates on your trading. It depends. The mystery box is just one of those things which you open. It's a little bit of a gimmick, obviously, but it's very cool because it's down to luck. Where if you don't have a spare fucking $250,000 laying around, you can still benefit with up to 30k in rewards. And all you have to do is get on this platform and make a very small deposit. If that's something that you would be interested in, then definitely check it out with a link in the description down below, because one of the cool things about OKX is that these guys have been around for a phenomenally long time. This is one of the oldest still standing derivatives exchanges in crypto, older than Bybit as well. So these guys do not fuck around. They've been solid for a very, very long time. For an exchange to last as long as they have, I don't even know how long they've been around for, but definitely like more than 4 years, which is ancient at this point in crypto. That is very, very impressive. And to now be getting huge bonuses like this is also super cool. So go ahead and check them out. But like I said, these kind of things that make Bitcoin a little bit more predictable in terms of its characteristics are really solid, and they're worth paying attention to for that reason, in my opinion. Now, the thing is that there is one big difference that I want to point out to you guys with this trend right here, and it is to do with the Ichimoku cloud that Bitcoin had at the time. Now, see, when Bitcoin found resistance for the third time at this level, we're looking at the same 2018 chart as here, but now we're on the daily time frame, right? This was weekly, now we're on the daily time frame. With this resistance hit that we managed to find for Bitcoin, what we had right here was a big Ichimoku cloud on the daily time frame. Huge cloud. I was actually talking to you guys about this on this YouTube channel way back. I was making YouTube videos on this content way back in 2018. That is now 5 years ago. That's half a decade ago. My God, that is a long time. And what we had back then, guys, was a situation where we had a huge area of resistance on this chart, absolutely enormous, and obviously it didn't work out very well for Bitcoin. But it is different now. What we have on this occasion right here, if we zoom right in, is that we broke our resistance cloud, and it was quite a blue sky breakout, to be honest. As soon as we managed to get above this resistance level, Bitcoin managed to rally really hard to the upside. We managed to even start breaking resistance levels, the very same resistance level I've been talking to you about practically throughout this whole video. But more importantly, I mean, this is not a resistance level that Bitcoin was able to break previously. So now that we've seen a break of it, that's a really strong sign. It's definitely a sign that things are going in the right direction. That's one of those things that makes this complicated, right? Because people are asking me, do I actually think that what we had down here was the bottom? And my answer was before no, and it kind of still is. The problem for me is that we don't have a good macroeconomic climate, and Bitcoin is very much subject to extremely quick rises and rises that don't really last, and going irrationally in one direction before switching irrationally in the other. And to me, that means that, yeah, we could go all the way up to 40k and still be within this bear market. And actually, that would make a lot of sense. I want to demonstrate something to you guys right now. And I already know that you guys that had your lotion out at the beginning of this video are not going to be liking this so far. But again, you know the deal. I mean, the fact that you don't like this stuff, it doesn't change reality. It really doesn't. What I want to show you is what happened right here. I've been using this example before because I just think it's so valid to the market. And actually what I'm going to do is I'm going to take this one step worse and draw something out like this as well, just to kind of demonstrate, something that I think when you see it this way, it actually looks very possible, because it is. Somewhat similar rally like right here. Let's just say, this tops out at 50, but it doesn't really matter. Forming something a little bit like this. This would be very characteristic of Bitcoin. Forming a really nice rally to the upside, fucking around a little bit, giving us false hope that we might continue, and then we just collapse. It's so synonymous with what Bitcoin is and what Bitcoin does that for me, it's not good enough to be rallying up like this. It's not even good enough to have a green Ichimoku cloud on the daily. It's not even good enough to be above our EMA ribbons on the daily. None of these things are, they're all great. They're very, very good signs for now. And you know what? If this is a real bull market recovery, then obviously we're going to get these signs as well. But this isn't really, in my experience, how I'd expect a bull market to end. Usually, a bear market to end. Usually we're going to be having, in this case, it didn't quite end, right? Because we went back down. But when we finally managed to recover up, it wasn't actually that quick until it started to go crazy at about $14,000. I actually entered a long position up here and traded it up. That was really fun. VIPs saw exactly what I was doing there as well. Shout out to those of you inside of the VIP group. You can join by following these steps on screen right here. And so what I thought was really interesting about this right now is that, we have got a lot of the right signs to show us that we could be actually in a very nice, new bull market. But at the same time, there are factors that Bitcoin, and I'm not going to waste a lot of time repeating them because you already know the deal. There's a lot going on right now that Bitcoin has never actually experienced or lived through. For example, the Fed rate hiking cycles and so on. And I don't think that it's particularly sensible to just start, throwing our t-shirts off and starting to party in Ibiza again. Right now, even though, yesterday's news with the FOMC interest rate hike, just 25 basis points was good news. I think it's still too early to celebrate, and I think it's going to take a while for things to actually come back on a very long-term scale, purely because, we need to see things getting better overall. We need to see people, willing to spend money again, having some disposable income, for the stock markets, which are actually doing very well, to stay doing very well in the long run. One of the things I was talking to you guys about a lot was the S&P 500 and this 4120 to 4170 resistance zone. We actually managed to gap into it today, which was pretty impressive. And this market's actually still open. We've got another 25 minutes until it closes, so it'll be closed by the time you watch this video, but it's done very well today. We look at this on the 4-hour time frame. Let's say the 1-hour time frame, actually, it's a little bit better. We've definitely managed to hit this resistance zone. This is a resistance zone that I was telling you guys I'm expecting the S&P 500 to hit for a very long time. It's beautiful to see that happening now. Obviously, I wasn't actually particularly bearish on the S&P 500 for quite some time. Same as Bitcoin. I was telling you guys I'm bullish on Bitcoin when we were at the bottom. Similar for the S&P 500. And now that we've managed to hit this area, obviously this is going to be the next high to reclaim. And, the good news for the S&P 500 is, in my opinion, it's actually kind of cleared the bulk of its resistance, or it's like at it right now. I think that if we can get above here to this next yellow box, which sits at 4270 up to 4300, this is going to be an important level to reclaim. But literally, as soon as we're above here, I don't have any particularly clear resistance levels until 4600 up here, which is a really nice big gap. This is a 300-point gap. 8%, pretty nice range. Let's calculate this. I'm curious how big this range is actually. 6.5%. Pretty nice gap right now. For the S&P 500, if we manage to get up there. And this kind of thing would definitely give me some hope that, things might be here to stay. Obviously, what I said about disposable income doesn't necessarily need to happen, because markets kind of jump the gun on these things. The whole point of markets like this is that you speculate, and the early speculators that turn out to be right get rewarded very well. But the flip side to that is everyone's trying to be an early speculator, and if you're wrong, then you're not seen as, an early speculator that got it right. You're seen as a trigger-happy trader that jumped the gun and just got carried away with excitement when the fear and greed index was ticking up, when we've been, basically reproducing the same patterns that we've seen before that have ended in disaster for Bitcoin as well. Like I said, lots going on in this chart that actually shows me that this could very well stick around, but a fair amount also showing me that, there is some reason to be cautious. Now, I'm not trying to say that I'm bearish about this. I'm not. I was actually in a long position today. I shared it with VIP members. Unfortunately, it didn't go my way. I had a stop loss set, which would have gotten stopped out on this wick, but I saw that coming. It would have been a 15% loss, so nothing crazy. I think like 13%, nothing crazy. The risk was managed very tight, but I kind of saw this dump coming, and I just closed at a 6% loss, somewhere a little bit higher. So very close to break even. It's okay. It happens. Obviously, Bitcoin managed to rise up afterwards, and we're back into this equilibrium. So that's okay. That's how it works in trading sometimes, and that's totally fine. Really, absolutely no issues there whatsoever. And what it looks like to me is that we have kind of managed to climb up to an area where previously we just get pretty quickly rejected, but this time we've managed to not only get above it but stay above it as well. And I like that. I think that's a really strong sign. From the point that we broke out to where we are now, it has been nearly an entire day. And if we do zoom out and take a closer look at what this actually means, we're basically consolidating right at the top of a resistance area that has been fairly problematic for Bitcoin. So I think that if we are able to mount another attack, our next level is going to be this high right here. If we are able to reclaim this high and get above it, that is huge. Like if we get a daily close above it, if we get a weekly close above it, that is absolutely bloody enormous. That's so significant for Bitcoin, ladies and gents. I mean, I cannot downplay that at all. Getting above this area here would be the clearest sign that we're, I don't want to say definitely because obviously nothing's guaranteed, but it would be the clearest sign that we've got hopefully a very clean, easy path up to 30K. If for no other reason, just because there's nothing on this chart between this green line and this yellow box, right? I mean, look at this. When we went up, we went straight up. When we went down, we went straight down twice. And then we went up again on this occasion as well. This is a very, very important area on the chart where we could just jump up massively. And again, these things get really interesting when you couple them with huge rewards that you could be getting with exchanges like OKX and Bybit. To be getting on Bybit right here up to 30K. The cool thing about Bybit's bonuses is that they're guaranteed, right? If you qualify for them, you're gonna get them. With OKX, anyone can get them, but obviously it's a mystery box, so you may get it, you may not. I was playing with them, by the way. It's kind of fun on the phone. You got to swipe and then it opens the box. I don't know. It reminds me of my CSGO days where I'd open up, I forgot what you call them, those crates or whatever. I forgot. Loot boxes, I forgot. Anyway, all the games have them now. And what's really cool is, to be able to, just be eyeing opportunities like this and have that kind of free trading cash already in your account ready to go is a pretty big deal, I would say. I think that's a really quite significant, exciting opportunity. So definitely check it out. It's a super safe exchange. It has been for many years. It's definitely stood the test of time as well. And if you want to couple that with Bybit, you have up to $60,000 of bonuses that you can get. Again, I know it does say 5K here, but if you head on over to the link in the description down below, sign up and make your deposit, head on over to the rewards hub, you will be able to get up to 30K, again, depending on what you're doing on Bybit. So very, very cool setups indeed. Now let's just zoom in onto the shorter time frames once more again, just to really round this off. The fact that we are consolidating here, I think, is a good sign. I'm taking this as a fairly straightforward up and then sideways time-based correction before potentially another leg up. That's certainly what I'm expecting. I think if we were going to get rejected and drop down, that probably would have happened already. We also did the most bearish thing Bitcoin could have done, which is deviated above and then come back down, which is what I predicted on the YouTube channel. But I did warn you that this level would be an important area, and if we don't lose it, we're fine. Thankfully, we didn't lose it, and we managed to mount another attack up, which means that I think Bitcoin's still in a pretty sound position overall. I think it's in a pretty good position overall. I'm also just seeing now that we are in another very typical rising channel. So that is beautiful. That is exactly what allowed Bitcoin to pump up the last time. Bam, right here. Exactly what Bitcoin had the last time, and the time before that as well. One of the times before that within this current trend, Bitcoin has loved pumping out of these ascending channels. And again, if you cast your mind back to what I said towards the beginning of the video when I was talking about this chart pattern, Bitcoin loves to repeat certain characteristics, and it does them on all sorts of time frames in all sorts of ways. And this, I think, is a really nice example of that starting to cook again right now in front of our eyes. So that is also very, very exciting. There's a lot going on right now. I think opportunities are really going to start shaping up in the altcoin market as well. I am going to be keeping my eye on the S&P 500. It's got one more day of trading, if I'm not mistaken. It's really confusing with time zones here. But yeah, I'm pretty sure there's one more day before this week ends. Yeah, there is, isn't there? Yeah, there is. So we'll see how that goes for the S&P 500 as well. It's been a very strong week so far. If we take a look at this on the daily time frame, I believe that was the Monday. I don't know. That was Tuesday, actually. No, this was the Monday. Had a little bit of a drop, but the rest of the week since then has been very strong. So if we can end it strong as well, that would be beautiful. Even if we end it with a bit of a pullback, that's actually potentially even healthier, because then we can start Monday off next week with a nicer rally to the upside. Maybe a bit of consolidation here for a week or two as well would be pretty healthy. Just trying to keep it realistic right here, ladies and gents. The dollar is hanging on by a thread. Just a couple of hours ago, the dollar actually fell below my key support range right here. It gapped below my key support range, actually, which is quite bearish for the dollar. It is now, just kind of scrambling to hold on, but guess what? This is quite safe to say going to be probably some sort of resistance for the dollar now. So it goes both ways, and yeah, given that we are able to find some nice support here, I think it is fair to expect a bit of resistance as well. And the good thing about this chart is that it's 24/7. Well, it's 24/6 or 24/5, which is good enough for us. So if we continue to see this drop down, I think that would really, again, just kind of clear the skies for Bitcoin to rise up a little bit more, because Bitcoin generally inversely correlates with the S&P 500. If the S&P with the dollar moves up, Bitcoin moves down, dollar moves down, Bitcoin moves up. Generally, these inverse correlations are only general, and obviously there are many, many exceptions to the rule, and you're not smart for pointing them out. So I think that's an important note to keep in mind. I'm going to be heading off on this one, though. That Golden Cross video is coming very soon. If you're excited for it, do me a favor and smash up the likes on this YouTube video. Double check that you're subscribed as well. A lot of you guys watch this content regularly but are not subscribed, which means that you're going to be missing out on other time-sensitive bits of information. Of course, make sure you got the bell icon checked so you get notified for these videos, and just check in your settings on your phone if you actually have notifications switched on for YouTube. But if you're already in my Telegram channel, you're going to be getting notifications anyway, and that includes just more analysis from myself and my team sent to you around the clock. Again, completely free of charge, just like this YouTube channel. And if you want to take it to the next level, then you can click on my name and click on send message to ask me how to join VIP. Puts you in a direct chat with me as well. One last time, OKX, super, how do I say? I was going to call it historic, but I feel like that's making it sound like a dinosaur. But definitely a super well-established exchange on the block. I was actually quite excited to work with them. And by the way, these guys, like Bybit's got like Red Bull racing in F1. OKX have McLaren, which is super cool. I don't know if it's actually like on their website. They're so proud of it. Yeah, bam, right there. Obviously, they're going to show it off. Even Manchester City football team. Obviously these things mean absolutely nothing as a trader, but it's cool. It's cool. And I think, if for no other reason, if you're a car fan, McLaren's pretty damn cool. Red Bull don't make cars, so I can't say anything about Bybit there. But huge offer right here, 30K. And like I said, you do not need to deposit ridiculous amounts of money to get this kind of bonus. It actually, to get up to 20K, you only have to deposit $50, which is pretty ridiculous. We've all got $50 laying around that we can throw onto an exchange, or at least many of us do. And my God, if you don't, you should not be a trader. Let's just clear that up. All right, you're not going to hear that from anyone else. But if you don't have $50 spare laying around, you are not fit to be a trader. Please take your money and keep what you have. That's not smart. You're better off getting a job or a second job, than trading if you can't afford to throw $50 around. Not saying that you should, of course, but if you can't afford to, yeah, it might not be for you. You know the deal, guys. You're getting the truth and nothing but the truth on this YouTube channel. If you have enjoyed this content, you know exactly what to do. Like, subscribe, tick the bell, and I'll see you all in the next one. Cheers. Bye.